Hello, my fellow entrepreneurs. Today, we are going to cover bank statement loans and how these loans can help you qualify for more and buy the home of your dreams. Entrepreneurs, self-employed borrowers, have you been through the loan process? And have you seen how strenuous the loan process is? And you're getting paid a little differently from W-2 employees. A W-2 employee gets paid and they have taxes come out of their paycheck, and they have benefits like 401k, TSP, all this other stuff coming out. However, we can still use the gross income to qualify. You, as a self-employed borrower, you're going to have a little different situation. So the best thing to kind of like highlight this is, let's just say you have $100,000 in gross income and you have $50,000 in claimed expenses. In the end, once you file your taxes, and we're just going to use a basic Fred Flintstone model of taxes, $100,000, $50,000 in claimed expenses, you're going to have $50,000 in taxable income that we can use. That's totally different from my W-2 scenario that I just talked to you about, and that's why you may be having a challenge in acquiring a loan, and that's why you're watching this video and you want to learn more. What is a bank statement loan? A bank statement loan is only one alternative product that we can give to self-employed borrowers to help you qualify for more. And just like the name of the loan implies, this type of loan is actually going to be, we're going to take bank statements and we're going to average it out. And we're going to say, hey, this is how much you qualify for based on your deposits. With that being said, not all lenders are going to offer bank statement loans, okay? You're going to have a lot of lenders that only offer your traditional VA, FHA conventional. And even those lenders may not have the most favorable credit score. So when you're told no, there's always ways to turn that frown upside down. So definitely be out there looking, talk to wholesale mortgage brokers, because we do have more options and we have more products for you to choose from. And that is the importance of shopping around. Not only for the product, but to save in rate, okay? When you're shopping around and you compare two loans, and let's just say the most vanilla conventional loan at a 680 credit score, 20% down, you're gonna see that you're gonna save a lot of money by going with a wholesale mortgage broker. So you should definitely shop around, not only for the savings, but for the products as well. What is a bank statement loan? Basically, the way that it works is we will take a profit and loss statement, typically 12 months, and we can also take your bank statements, generally 12 to 24 months. And what we would do is we'll take 100% of the deposits, personal deposits, and they can be counted towards your business bank statement loan. With business bank statements, we are only going to be able to use 50% of the deposits that are averaged out over the 12 to 24 month period, whichever is more favorable. And often, when we use 50% of that business deposit income, we're kind of accounting for some of the expenses and things like that come out. So if you have these deposits going into your personal bank account, it is going to be a lot easier to qualify with this. These products do come in shorter terms. And what I mean by that is we don't have to have 12 or 24 months. We have products as little as 3 months and even 6 months. So whichever one we can average out the most deposits is probably going to be the most beneficial. And with that being said, these loans are strictly for self-employed borrowers or borrowers that are 1099 workers, okay? 1099 workers are people that typically have a Schedule C filing on their tax return, or they will sometimes even have a 1120S, which is a partnership type business arrangement. Keep in mind that a lot of these programs out there, when we kind of pigeonhole ourselves into a different way of calculating the income, these are going to typically come with little higher rates, okay? The pro is that you're going to be able to get into the house that you want, the house of your dreams. You're going to be able to get into it with a pretty competitive interest rate, okay, depending on your credit score. And obviously, that's something that, is common sense, right? The better you've worked along with your credit and assets and things like that, the better your rates are going to be, because it's less risk for the investor. However, the con, like I said, it is going to be a little higher on the rate. We are going to have to look at strictly deposits that are going in, and there are certain deposits that may or may not work. And a lot of times, with those little bank statement type loans, There are quirks, right? You know, recently I had a set of bank statements that were totally legitimate that came from an off-brand credit union. And when the one of our investors ran it through their system, they noticed that, hey, there are like a couple hundred items of potential fraud in the bank statement. However, going to other companies, they were a little more open-minded and they were able to look at it and they said, hey, these are legitimate bank statements. We can average out all the deposits and we could use this. In relation to the interest rate, I would say, if we were to take a 700 credit score conventional borrower with 20% down or 25% down versus a bank statement, you're probably looking at maybe a 1 to 1.5% increase in the interest rate. If I had just had to pull out a number, the closing costs are typically going to be a little higher, I would say, as well. On a standard conventional loan there are no standard taxes or insurance, but I would say closing costs at 0 points will probably range on a $300,000 purchase price at anywhere between like 2.5% to 3.5%. Whereas on the bank statement loans, you're probably going to have to account for maybe about 3.5% to 5% in closing costs because of the risk that's associated with it. When you're choosing your lender, a couple things that are really important. You have to research the lender, look at their reviews, make sure you're looking at the consumer feedback on those reviews, making sure that they know that, hey, we have different options for these loans. As I mentioned earlier in this video, certain investors have certain quirks, right? They're going to have, they're called overlays. Okay, these overlays could be, hey, we're going to run your bank statements through a system and see if it's fraudulent. And if you're not at one of the big player banks, it may not pick it up. However, having options really do matter. I recently had a non-conforming loan come through, and the difference at 5 different companies range from 7.875 interest rate to over 10.5% interest rate, and that's a huge difference. So shopping and having your options is very important. Go with a larger broker like Nexa Mortgage, right? We have a couple hundred different investors that we can kind of go through for conforming and non-conforming loans. So if we were to break it down and we look at bank statement, we may have 20 or 30 different investors to kind of go through. Look up our BBB ratings, right? Better Business Bureau ratings, just to see if we deliver. You have to also throw out the cream of the crop versus the rest, right? When you're looking at an overall company reviews, then you may see that, hey, there's 40% of the top producers that really value their business all the time, and we're always going to strive to, hit customer satisfaction and deliver the best quality. And then there are the other ones that may do one loan every 6 months or so, and because of that, they don't value customer service as well. So definitely weigh everything out. I always like to do like the pros on one side and the cons on the other side. And if the pros outweigh the cons, hey, that's a winner for me. So the main point in all of this is when you're going out and you're getting a traditional loan, it's great. However, there are guidelines that we have to follow. And if you have a lot of expenses and you write things off and you have a very savvy accountant, you may not have the income that will qualify for buying a home. But there are options out there for you to be able to afford the home that you actually make enough income for, and that may be a bank statement loan. So if you have any questions or concerns, my name is David 𝐬𝐲, and I'm with the 𝐬𝐲 Mortgage team. I can be reached at 757-478-8493, and I look forward to talking to you.